We see incredible risks, yet the bullish trend persists. It's widely expected that volatility will increase and the market is at risk of large falls. So we're approaching the stage in the cycle where investors are most exposed to large losses. These are ideal conditions for an absolute return income equity fund, which are designed to protect and benefit in changing markets. There are three key features. Number one, protection is always in place with upside. So if the bullish trend continues, you participate in the upside. And secondly, we're designed to benefit in changing markets. The more volatility, including large one-off falls, the more profit potential. And thirdly, we have a 7-year track record of delivering on our objectives with no downside ever exceeding 2%. Our approach combines returns, income and protection for investors wanting minimal capital at risk at all times. We buy and hold blue chip shares with lowest cost protection always in place. Like all funds, our returns vary with the state of the market. In trending markets, we have return between 6 and 8% per annum. For changing markets, greater than that, and in stable markets, short-term bond type returns. For income, we pass through dividends and franking credits at a minimum of at least 3% above the cash rate. And for protection, it's delivered. We've had no quarterly drawdowns exceeding 2%. Our returns have broadly been in two phases. To the 4 years to March 2015, we returned 31%. These were trending markets with periodic bouts of volatility, largely on European concerns. Since that time, markets have been historically stable and we have returned short-term bond type returns. One measure of this stability is shown in the VIX, or the volatility index. It is currently trading at 10 historic lows. For the last 20 years, its average has been 20, with various stages of touching on 40 and 80. It's our expectation that markets will again revert to a more volatile stage, and we're very well positioned for that. The ASX 20 stocks are all ranked based on fundamental and technical analysis to have either a bearish, neutral or bullish outlook. Importantly, we have a two-dimensional payoff as distinct from most approaches which have the one-dimensional or straight line payoff. For those stocks with a bearish outlook, we buy extra put options. As the share price falls, they increase in value, which we sell for a profit. Stocks with a neutral outlook, we have a V-shaped payoff profile in place. As the share price moves between that range, we make a profit from the trading of the options. And finally, with a bullish outlook, the stock price gains is where we make our money. We're a conservative asset with the potential for capital growth and are considered an alternative to cash, term deposits and short-term bonds. Alternatively, as investors age and are looking to de-risk their portfolios, particularly pre and post retirees, we are a suitable allocation to meet their needs. We're well placed for the uncertainty that lies ahead. Our approach combines returns, income and protection with minimal capital at risk at all times. Please feel free to visit our website or contact us if you would like any further information.